We're back, baby. Episode 2, that's Roman numeral 5, but episode 2 in the US of Internet Capital with the Grand Tonto, that's me, and Ben Joe, that's him. Obviously, we don't have a beautiful background this time. We're back home now, but we're here and ready to go for another great episode.
Yep, happy to be back. Big week this week, honestly. A lot of news on the regulatory front, a lot of price action, a lot of hopium that actually might be long-term good news, turning the market around. So excited to dive into this one. Any initial thoughts for you, the Grand Tonto, before we get started?
I agree with all that, and maybe we'll have time for this later, but there's a lot of hopium, and there's a lot of haters. A lot of haters out there in the crypto world, baby, and we're going to talk about them if we get the time later.
Yeah, you never get rid of those. That's just kind of how the space operates, unfortunately. There's always new news. You don't stay in the spotlight too long if you're getting hated on, at least, but that's the way it goes. So the way we want to start off today, though, is by looking at some prices, some charts. Everyone loves the charts. TradingView is a classic, so I'm going to pull that up. Typically, I would think that we should start with Bitcoin, but we're going to start with the ETH this week. Obviously, you can't really argue with that, I don't think. This is the ETH weekly chart. So right here, obviously, ginormous weekly candle after that kind of really few months long downtrend. That was pretty painful, considering that I know we both own a lot of ETH, so not what we like to see, but it's pretty cool when that happens. And I forget the exact numbers, but I think we had the largest daily ETH candle or the second largest daily candle in history. Do you remember those numbers?
I think it was about $560 candle right there.
Yeah, it's pretty wild considering just the way these markets trade, despite you'd think that they trade kind of more reasonably now because the asset class has been around a while. At least me, coming from really the last cycle was my first cycle, and coming back and be like, okay, it's got to calm down a little bit. It's not going to be as crazy, but apparently this happens every cycle. It just blows my mind that much capital can flow into the asset at one time. I read a stat that about $60 or $70 billion was added to ETH's market cap with this move, which is similar to Solana's total market cap, I believe, or fully diluted valuation for both of those, which is pretty impressive, but it's just crazy that this can still happen.
That candle was in the period of about 4 hours, too.
Yeah,
so it was very compressed.
Yeah, so I think we'll get into kind of the reasons why this happened, and that's going to be a big theme for the show today. A lot going on, specifically the ETF, as everyone knows, and we'll get into that. But before we do that, let's just check in on Bitcoin as well. We've really been ranging for a bit here, and obviously that was a nice green candle on Monday too, off the ETH news.
Yep.
But really been ranging right around this all-time high, and honestly, to me, I'm no trader, but it looks pretty healthy to me. And kind of the traders that I talk to and listen to are feeling pretty optimistic, not only from kind of the regulatory winds changing, but also just from a TA perspective.
I think the biggest driver there, though, is going to be interest rates. I think interest rates fall, and this could, I'm not going to say go exponential, but that would be a significant driving factor. And the news now is interest may get pushed again because the economy's heating up a little bit. But yeah, I don't disagree. It looks solid. I don't think Bitcoin's going anywhere. It's got a great use case. I think people understand it.
I like the idea of the liquidity sponge is what Bitcoin is, a lot like gold. So it's like a flight to safety asset, especially for younger people, for millennials, and it's finally received as that. Although it is like a risky asset, people are starting to understand what its qualities are as a store of value asset with really known monetary policies that obviously can't be changed. So once it stops trading just like a crazy tech asset or something like that, it will be a few years down the road. But these other characteristics are starting to be baked in. So the notion of the liquidity sponge is basically whenever global liquidity goes up, Bitcoin goes up. And the interest rates are a key driver of that, obviously, because the cost of money goes down, there's more borrowing, more economic activity. And then there's a lot of other mechanisms by which this can happen. I just read a post by Arthur Hayes. He founded BitMEX crypto exchange back in the day, ended up getting in a lot of trouble for that with the U.S. authorities. Super smart guy, had a long career in banking. Does really good macro analysis. You guys can check his stuff out. I'll leave it in the description. But he talks a lot about this idea and why he thinks global liquidity is kind of going to increase starting very soon because of this interesting interplay between Japan and China and how they want to keep their exports cheap for other countries. So he has really good analysis on that, and I'll kind of add that. But liquidity goes up, Bitcoin goes up. I think we're going to continue to see that.
Absolutely.
So I agree with your take.
Absolutely.
Let's check in on the total 3. This is the last one we're going to do today. And if someone gets mad because we're not doing Solana, we can do Solana later too. I feel like I'm going to hear some of those comments.
Yeah, I think though there should be a clear rule that if Solana is currently down, we don't have to show the chart. Is that fair?
Yeah, if the chain went down in the last 3 weeks, we don't have to show it.
Exactly. I think that's fair.
Fair enough. Okay. Total 3. So are you aware of this chart? I know you're not the biggest chart guy, so...
Yeah, I'm like looking at this chart. My chart usually says 15 min on it, not 1 week or 1
Yeah, I know. You have that habit. That's a bad habit, but that's all right.
No,
we like to zoom out. So this is total 3. So this is the total market cap of all crypto coins, excluding Bitcoin and ETH. So it's a really interesting gauge on alt season, where we are, what's pumping. Because like any individual coin might be up or down. Like everyone knows half the coins we're just gambling here, and that's kind of how altcoins trade anyway, on the back of narratives and also just kind of attention. But this kind of gives you a good index of the average of all those, which I think is like a useful metric. And as you can see, we're kind of sitting at the same place. We got a little bit of a bump from the ETH ETF news here as well. But we really haven't made the next move up after this first leg that we got from the first half of the bull cycle here. And I think a lot of people are expecting us to get a proper alt season where we at least reclaim the highs of last cycle. So I think it's really interesting to track this.
That's another 50% bump, if my math is correct, looking on the scale there.
Yeah, that's the thing. I've really been thinking about rotating some into alts recently. But then I think, do I really want to rotate out of like any Bitcoin or ETH bags whenever the ETH ETF is coming, all these strong flows, all these catalysts from a regulatory perspective? And risk adjusted, it just feels, unnecessary at this point. But I think as we keep watching this and see how it plays out, that could be a really good indicator of how to position your portfolio as the cycle continues over the next 3, 6, 9, 12 months.
So Ben, just as a point of clarification for me and for the other kind of newbies in the audience, when we say alts, we're not talking mem coins, we're talking all the coins that aren't Bitcoin and Ethereum. So we're talking OP and ARB and Solana and all those coins they're mainstream coins, they're just not the top 2.
That's correct. Yeah, so this incorporates everything, but it is true that those do have the largest market cap, so they're going to constitute the largest majority of this. So let's say like Solana gets a big move, this will move this more than say like your random meme coin does. So that's correct, definitely. But interesting metric. If you guys haven't seen this chart, good one to keep your eye on. Good. Price. Yep, you're good with our work here on the price section. You want to move on?
Yeah, let's move on. Can't believe I'm going to say this, but lots of interesting stuff in Congress and politics this week.
I was just complaining last week about being disappointed with the regulatory state here in the United States, and it really seems like we just flipped on a dime. We really did. So I guess the first thing that we have to get into, ETH ETF approved by the Securities and Exchange Commission. We'll clap for that. But just to kind of give you guys an idea about how all of this played out, it really started with a tweet from Bloomberg ETF specialist Eric Balchunas. I believe he tweeted it on Monday, which is really what set off that price move. Let me pull it up here to read what he said. But this was really unexpected. No one really saw this coming. And actually his percentage chance for the ETF being approved at the time of this tweet was 25%. So he was pretty pessimistic up to this point. Update. His partner, James Seyffert, and I are increasing our odds of spot Ether ETF approval up to 75% from 25%. Hearing chatter this afternoon that the SEC could be doing a 180 on this. Increasingly political issue, so now everyone scrambling, like us, everyone else assuming they'd be denied. See Nate's tweet below for probably an order of events, but again, we are capping at 75% until we see more. Example, filing updates. So this was a bombshell. Again, no one saw this coming. And then price quickly reacted, and that's where we kind of got the start of the candle. So any thoughts on that so far, the Grand Tanso?
Yeah, in crypto, they're black swan events, but they happen over and over and over again. And this is one of those black swan events that essentially all of this took place possibly because presidential candidate Trump embraced crypto, and the other party decided we can't alienate these moderate voters, younger voters, and maybe we need to take a closer look at this and maybe tweak our policy.
Definitely, and I want to get more into that. Let me finish out the story here, though, so I can explain kind of what happened here. But I like that point. I think you're right. I think you're right about that.
Yeah.
But to continue, so basically what Eric is saying here and what ended up happening is that on Monday, the SEC, the Securities Exchange Commission, requested that the New York Stock Exchange and CBOE Global Markets update their so-called 19B-4 filings. And what these do are proposed rule changes that basically allow the ETFs to trade. So this was, again, very surprising, as their current estimate for the probability of it being approved at this date was 25%. And that was kind of the initial catalyst for the week. And then to continue into Tuesday, Fidelity filed an amended S1 application with the SEC for its ETH ETF. And S1 filings are basically what the SEC requires for launching securities offerings in the United States, and the asset managers have to issue those. And what the amended applications effectively did was say that the ETH in the ETFs could not be staked, which is an important point. So basically what happened, the SEC changed their tune, and they were like, hey, we're going to let this happen now, probably on word from the White House execs, higher up Dems in Congress. And their only condition there was that staking be removed for now, and they didn't really make a decision on that. So that's kind of what happened. And then the ETF actually ended up being approved Thursday. We're recording this Friday, so just yesterday, and it took them all day. They waited till like 5 o'clock. They were supposed to announce it, like, people were saying 12 o'clock, then 1 o'clock, then some people were saying it got delayed until 10 p.m. and things like this. So
yeah, I was watching the Bankless guys, and they were getting ready to sign off at 5:05, and that's when it came down.
Yeah, they really pushed it out there, but ended up approving it, and yeah, now so we're expecting ETH ETFs, which is kind of crazy because, just as a general comment, this is why if you're just trading or thinking about the market from what you see on Twitter all the time, you're never going to be right. You need to do some more kind of in-depth analysis and listen to like maybe actual lawyers and people on the issue, because from the very beginning, people were saying like, hey, this is never going to get approved. ETH's definitely security. And I know you want to talk about like Bitcoin maxis and their comments on Ethereum, but you can't just listen to these people. There's a lot of noise out there, and to be honest, no one really knows what's happening. I think I respect the Bloomberg guys for giving their best estimates, all this information, and from what they were saying, it wasn't going to be approved, and it ended up being approved, and they were honest about it. But all of the FUD that you see on Twitter, a lot of times it's really baseless, and it's just people trying to protect their bags.
Exactly. No, I think the Bloomberg guys their job's to report the news and to try and be honest and fair about it. And at the time they were reporting 25%, it probably was 25%. And Black Swan event happens, 3 days later, it gets approved.
Yeah, no, completely agree. But regardless, it's exciting. Can't believe that happened, to be honest. Yeah.
So Ben, when do you think that the ETFs could possibly start trading?
It'll be a few months, so it really just depends on the speed at which the SEC reviews these amended S1 filings from all the asset managers. So the 19B-4 filings are really from the exchanges themselves, and therefore the proposed rule changes for them to be able to list these things. And the S1s are, as I understand it, from the asset managers themselves. And they're very quick about this. Like, they want to get these out the door. They want to start charging management fees on these products. They want to get it out because that's how they make money. So those are, I believe, like I said, Fidelity's is in. I think BlackRock also just submitted theirs yesterday or earlier today. And those are going to be in very soon, early next week, the latest for all of them, I would assume, if they're not already in. And the process is really on the SEC's timeline then. So next few months, I think, is about right.
Ben, could you pull up your tweet you have on our notes about all the firms that have filed to list the ETH ETFs?
Yeah, I forgot about that one. Let's pull that up. That's good context to have here.
Yeah.
Pretty astute list of participants here, if I do say. So we have Van Eck. This was the first one. This was the first deadline. So the SEC had to make a decision by the final deadline for them, because they were the first to file, on May 23rd, which was Thursday.
Yep.
And then here's all the other ones.
Yeah, looking at this, you have the largest asset manager in the world, BlackRock, that evidently believes this is going to be a profitable thing for them, which it will be, obviously. They're going to charge 1% no matter what the price is. But I don't think Larry and his company goes into things thinking it's going to be bad for consumers either. The other one on here that it's worth talking about is I think it's the grayscale conversion of the ETH they've held in that trust that they had. I think that likely means lots of ETH in that trust may be moving out like it did for Bitcoin once it goes live, which is going to have to be absorbed by the market. But this is an all-star list of fund managers and hedge funds and things like that have kind of signed up to take part in this, which is, I think, a good thing for the industry.
100%. Let me build on that. The thing I want to bring up here, one, what people don't seem to understand is that, as you said, they want to start making money on these. Like, they charge management fees on it. They want to get as many crypto assets into an ETF as possible because they can make money off of it. If they have a fund with all these assets, they charge a fee, they make more money. So I think just from like a regulatory perspective, we're not going to see more than Bitcoin and ETH anytime soon. But the incentives are aligned for these firms to want this to be approved and to be integrated.
Yeah, absolutely. And just to be clear, these were all approved yesterday, not just Van Eck.
Yeah, that's correct.
Or I guess I should say the exchanges were approved to list these pending S1s from these particular funds.
Correct, yeah. They basically approved the 19B-4 rule changes, which allow ETFs for spot Ether to be offered, not by anyone specifically, but in general, and then they need to approve the individual filings, S1s.
Yep. Gotcha.
And then from your on your note of the demand for ETH, as you basically said that grayscale, there's going to be some selling pressure because people are going to want to sell those assets because they've been locked up at a discount for the longest time because of the way that fund works, because it's not redeemable. That's why the trust is a bad structure, because the underlying ETH cannot be obtained by the holders of the trust shares. So it just trades all weird. It was trading at a 40% discount to actual ETH before the announcement, and then it shot up because once it becomes an actual ETF, you can actually convert your shares to actual ETH or just market sell the ETF. But on the note of demand there, that's going to be some selling pressure. How do you feel about the institutional and retail demand for the ETF once it's actually launched?
So a couple things. And the first one is more just normal retail oriented. I think that these firms are going to have to do a good job convincing the people with money, mainly 45 to 65-year-olds, what ETH and Ethereum is and what it can do. Bitcoin is pretty easy story. It's digital gold, period. People know what gold is, what it was used for. Ethereum is different. It's not like the dollar. It's not exactly digital oil, which some people say. You know, one thing I coined today on Twitter was I think Ethereum is basically Amazon Marketplace for the next generation of financial applications. It's the structure that allows all those to happen. So I think they have an education process to do to make people understand what ETH is, and that will then push demand for it, particularly among the people that have money. The second thing I want to point out, though, that's sort of interesting is all of these funds will basically take staking ETH off the table. You could see some of the ETH coming out of the Grayscale Trust basically staying out just to go to stakers to fire up staking nodes. So there could be some, I guess, pull for that and absorption of that ETH into those sorts of applications. So that's something we're just going to have to wait and see. I don't think anyone can predict what's going to happen, but that's just two sort of theories I haven't been thinking about.
I really like both of those. I think the note about education is important because ETH's an interesting asset. It's not like any other asset that you have because it has a lot of different characteristics. Like, it's used as money. You have to use it to pay for apps within the Ethereum and its L2 ecosystem, which is unique, but it's also a capital asset. It's also kind of like a bond because you can stake it and get cash flows from it. So it has all these different characteristics, so it's kind of hard to understand at first. But again, I think people always say ETH has no narrative institutionally because these people can't understand it. They're talking about Wall Street like they're dumb, and the people aren't dumb. They just need to be educated.
No.
And I think that work is going to be done by BlackRock and these firms that are on the screen who have the incentive to educate. So they're going to educate, and these people want to be educated. So that's one. And the other thing is that I think just looking at the Bitcoin ETF launch, there's a lot of fund managers who didn't buy it and just thought that it was going to be a sell the news event. Like, Bitcoin's not back. It's not. People don't actually want all this. And then they were left on the sidelines, and their funds got destroyed because all the asset managers who did allocate to Bitcoin obviously saw the huge, like, 60-70% increase that we saw in the months after from ETF flows. They're not going to make that mistake again. And then the people who did buy the Bitcoin ETF, these institutional managers who have it in their portfolios, they have some incentive to be diversified within the crypto space as well. So
absolutely,
they're probably going to want a piece as well. So that's the one thing. And then that's just from the institutional side. ETH also is obviously used on-chain, as we said. So there's whole demand drivers from on-chain activity that supplement this kind of institutional demand. And I think that's kind of hard to understate the impact, because people are kind of doubting this demand driver. Even if that wasn't there, ETH's had on-chain demand drivers forever. And that got us at all-time highs last cycle, and it could do it again. Now we just have this exogenous factor that could even further propel the asset. So I'm an ETH bull generally, but I just really don't see a reason not to be bullish. And I think the demand is going to be there from multiple different vectors.
Absolutely. And I think one thing that we should reiterate to the people watching, none of these are get-rich-quick schemes. I think ETH and Bitcoin are bullish over a period of years to decades. Yes, we're going to see these crazy candles, and yes, you're going to make a lot of money, but I think you need to be prepared to hold on to them if you believe in them for longer than 3 weeks.
Yeah, I think that's a good point to make. You can get really distracted in crypto from people getting rich off of meme coins, off of this and that, whatever it is, the latest trend, and it's hard not to see that over time these assets are going to be up. Like, fundamentally, they're sound assets. Central banks are going to have to keep printing fiat to kind of fund their deficits. It doesn't look like that's going to change anytime soon for the major players. So if you have these kind of robust supply assets with known monetary policy, over time they're going to go up as long as the whole thing doesn't explode.
Yes, exactly.
Yes. All right. I think that's good. You want to move on to kind of the next piece of that we have. Yeah. As a general comment, it was a ginormous week from a regulatory perspective. So the ETH ETF is just one part of it, actually. And this is maybe a little less known because it's not as huge headline as the ETF itself. But there was really important legislation that was being voted on in the House of Representatives in the United States this week. So basically it's called the FIT21 bill. And that stands for the Financial Innovation and Technology for the 21st Century Act. And basically it aims to establish a clear regulatory framework for digital assets in the U.S. So it's a bipartisan legislation and was like a collaboration between a few House committees. It's basically designed to address current regulatory gaps that basically made it impossible to do anything with digital assets as an entrepreneur in the U.S. And some of the key aspects that were included in this where it really clearly delineates the jurisdiction between the CFTC and the SEC and kind of what they have jurisdiction over. So it creates a definition for a digital commodity, and digital assets that don't meet the bill's definition of the digital commodity are digital securities. And the digital commodities will be regulated by the CFTC, and the digital securities will be regulated by the SEC. So this is a really important step.
The CFTC is the commodities regulatory agency, like the SEC is the stock security regulatory agency. So this is nothing new. They're just be regulating digital assets that fall under their purview.
Exactly. Yeah, that's correct. They've regulated like derivatives markets for years and also commodities markets. So it's corn and flour and wheat and things like this. It is important distinction for they're fundamentally different assets, right? Like as commodity, your corn doesn't have to report any quarterly filings because it's not a company. Right. But so it's an interesting distinction. It's really important because the SEC and CFTC has kind of been like jockeying over control, and kind of the SEC and Gary Gensler has had a crusade to try to get as much control as possible because they have some vendetta against the space, obviously. But that's like only one part of the bill and what it does. But I thought that was probably the most important to start.
Absolutely. I agree with that. And I'm looking at our notes here. A couple things that are kind of important to me and important, I think, as Americans is basically it does two things. It protects self-custody of assets, and it prohibits any agencies from preventing people from owning crypto,
Yeah.
which essentially enshrines digital assets as private property and gives us, Americans, the right to own those things, which I think is, sacrosanct in America.
Yeah, I 100% agree. And we could get deeper into this at another time, but really, like a lot of the values that crypto espouses, it really aligns with those of the United States. And that's why I think it's so important that we get this right. I guess just to kind of tie off the rest of the details about this. So this was voted on this week in the House of Representatives on Wednesday, actually. And it passed with a 278 votes for and 136 votes against, which is a large margin. And it now heads to the Senate, where it will probably see revisions before it's actually passed. But still, it was passed. And the big news here was that 71 Democrats voted yes for the bill, which was way more than expected. I think we expected something like 20 to vote yes for it. And that was a big deal. I've heard that like kind of the split in the Democratic Party is along generational lines. So the younger Democrats have really been persuaded to fight for crypto, and that it's something that we need. And I think this was a lot of lobbying effort that went into this from the crypto industry that kind of helped educate them and make this happen. But that is a really good sign on that front that many Democrats voted yes.
Absolutely. No, I agree with that. And it's sort of interesting that in the U.S., politics is often gridlock and no cooperation. But for this crypto industry, it seems like, both sides of the aisle came together, mainly perhaps for different reasons, to pass this. And in your notes, I think you mentioned that basically the bill will go to the Senate where there's no alternative bill, probably will pass there, and the White House has indicated they will not veto it. So that's a really good steps forward to make this actually into a law.
Yeah, 100%. I think I also wrote down here that I really view this as like a tone shift in America's relationship with crypto, because there's a lot of reasons why it kind of got super negative, most of which was just the whole blow up with FTX and Three Arrows Capital and everything that happened, after last cycle. And it really seemed like we weren't going to come back from that. And that's why the asset prices went down super far. Like, you ask the average American, they're like, oh, crypto, complete scam. And it really wasn't looking good from that. But this is a really pivotal moment. Like, we're getting an Ethereum ETF. We're getting actual legislation passed that provides a framework for it. Like, we're being integrated into the system instead of ostracized and pushed offshore. So it really seems like kind of a pivotal watershed moment that we're going to look back on, and was like, this week was a really big week in the history of crypto for the United States specifically.
Absolutely.
And I think that's just a very good thing to note here.
Yeah.
And the last thing I wanted to show here actually was that Representative Tom Emmer, who's been a crypto friend for years and really working with the space, had a great statement about why, as Americans, we should accept crypto and kind of help develop it. So I'm going to play that here.
Determine whether the next iteration of the internet
I can hear it.
designed by Americans, or if it will instead reflect the values of some other nation. The FIT 21 Act gives us that opportunity and unlocks a larger conversation beyond innovation. This bill is about national security. It's about consumer protection. It's about global competitiveness. It's about shaping what the future global digital economy looks like and how it functions. Currently, all online transactions are intermediated. But as we move deeper into the digital age, digital assets are key to decentralizing the internet so Americans can transact directly with each other. Now, no intermediary needed. Without crypto, we don't have this ability. And I think giving Americans the choice to do business through an intermediary or directly with each other is important. Having that choice will fundamentally alter the digital economy, unlocking new opportunities for Americans and individuals across the world in ways we haven't even begun to contemplate. However, this Congress can no longer stand by as regulators squander this opportunity right within our grasp. This administration has demonstrated they simply are not willing to allow the digital asset industry to innovate in the United States. For every legal inconsistency or regulatory hurdle they produce, instead of coherent, and informed guidance, they drive American digital asset users into less safe jurisdictions. That's why the FIT 21 Act is significant, to set clear and consistent rules for American innovators. Among the many important provisions in this bill is My Securities Clarity Act, bipartisan language tailored specifically to digital assets that provides the legal flexibility for a digital asset project to transition from centralization to decentralization.
Tom Emmer is a smart man. I think that was really good. The piece that he said there that I forgot about actually was about how an asset will be able to transition from centralized to decentralized under this legislation, basically allowing teams to offer tokens at the beginning and have to do certain types of reporting and kind of give the right disclosures. But then once the asset is fully decentralized, lots of people own it, they don't really control it anymore, and it's part of, like, let's say a DEX where it's like a governance token and people are voting and they don't really control anything anymore, it can actually become a commodity, which I think is a really interesting piece there and really good work.
Yeah, makes sense. And you know, Ben, it was a busy day in the House because the day after FIT 21 passed, the House also passed the Anti-Surveillance State Act. And the big part of that is it basically blocks central bank digital currencies, which sounds like weird on its surface, but if you dig down a little bit, all those central bank digital currencies would essentially enable the federal government or whoever was issuing them to track users of it. And, you know, in the U.S., there is a right to privacy, and there was some thought that could infringe on the right to privacy. And again, the House passed a bill to block any federal agency from issuing a central bank digital currency. So I think that's another win in terms of, maybe not in terms of crypto, but certainly in terms of crypto in America and crypto interacting with how Americans expect to be treated.
100%. Yeah, I think it's good. It really aligns with American values again. Like, we can use these public, open, decentralized systems if we choose to, and having the freedom to do that is important. And you could easily see kind of a CBDC being a slippery slope where they start mandating that you pay federal taxes in them, they start phasing out other forms of acceptable currency. So, and people will say, oh, like the government will never do this, never do that. I mean, look back in history, over long enough periods of time, people get into power who you don't want in power, so you want to have the systems in place that can prevent bad things from happening. And I think that's just a good kind of protective piece of legislation there that will help with that.
Absolutely.
Anything else you wanted to comment on the FIT 21 bill there, or any other final thoughts on the regulatory state? Mine would just be that I think we turned a corner. It's looking up. I'm really happy about the last week for sure.
Yeah, no, I think these are good. I think that we've now allowed Americans to do what we think we should be able to do. And I think in some point, the next thing that's going to happen, though, inevitably, there will be more regulation to make sure these things are safe. And that's fine. I don't think anyone doesn't want regulation. I think we just want clear rules. And I think this is a very, very good first step towards that.
100%. Yeah, I think we see senators degenning on chain next, offering meme coins, all that. Actually, that leads us into our next topic. Trump is accepting crypto donations now. He already has previously had NFTs, which I'm actually bullish on the NFTs, I'm not going to lie, because going into election year, and it just makes sense. Yeah. They've got the Trump coin, I think, and they got Trump NFTs. It's going to be a lot of attention. Attention drives the market. Might buy some Trump NFTs to be safe, hedge my bets.
Yeah, you could do that. That's certainly true.
I could do it.
That's interesting.
Yeah, but can you pull up his website there that I've linked?
Yes, I will pull that up now. Let me go there, and this is, I'm not a boomer, but this could potentially be a boomer issue with me trying to pull things up.
You're the oldest man in crypto, so that's all right.
All right, let's see.
You might start getting targeted Trump ads now if you.
There it is. Yeah.
Yeah. So he accepts all these cryptos, just underscores kind of the stance that he was taking.
Wait, is that
Dogecoin?
Dogecoin?
Oh yeah, he's accepting Dogecoin. That's right, and Shiba Inu. It looks like, yeah, on the far right, SHIB. So very interesting, choices here. Yeah. So there's just another kind of little, I guess you could call it progress, I suppose, on the regulatory. It's if he's the president, it's progress. I mean, like.
It is.
All right. Well, that was just yeah, that happened, so we had to share that. And regulatory heavy episode here, just because of kind of the way this week went. But I think we're ready to move on to kind of some other news. Yeah. Okay. To start, the first thing, you can bring up anything you want, but just to start, I want to talk about zkSync because what's going on? Like, there was a leaked article on Monday or Tuesday that they were going to announce a token generation event this week, essentially saying that we wouldn't get the airdrop this week, but that they would announce the details about the token. Yeah, here's the article. You want to talk a little bit about what you saw?
Yeah, kind of what I was thinking was I think they heard us. They may be one of our 8 or 10 subscribers on the YouTube channel because we were kind of dissing them a little bit. And, I think that like not 4 hours after our episode went live on YouTube, they announced that they're planning a token generation event, or that was the rumor. They're trying to get some good mojo back. Maybe they knew the ETH ETF was going to be approved, and they wanted to jump on that bandwagon.
Yeah, that's what it seemed like. But as of yet, it's Friday afternoon. We still have not heard anything about it from the official zkSync channels. So it's unclear if this was an unsubstantiated rumor or if this is legitimate. So I guess we'll find out, and I'm kind of let down because I'm a big zkSync. I was a zkSync bull. I was a power user. So
yeah,
we'll see.
You've been in there for what did you tell me your first transaction date was over 500 days ago?
Yeah, it's over 2 years ago. It was zkSync Lite. I was using zkSync Lite. I was following the project forever. Actually, shout out to the Bankless guys. The Bankless guys get a lot of flack, but they do some good work, and they kind of introduced me to zkSync, and I've been following them since. By the way, have you heard about the crypto fights? There's a new round upcoming this next week.
Well, the alpha today though is the one guy broke his 9th rib and he's out. And they did
Hoffman
call me to see if I wanted to
participate,
but my training schedule is pretty tight and I didn't think I could fit it in.
That's true. You're too dangerous too. Most of the crypto guys wouldn't be able to keep up with you. If you can start calling people out if you want, though. As we, kind of keep growing, I think you would be a prime candidate to participate.
We could do that today. We could do that right now if you wanted to.
You could tweet. You could tweet it out.
There's some people that have kind of got on my nerves this week.
Yeah. You want to talk about that?
Yeah. So there's this guy. His name's Fred Krueger, and he's sort of
Krueger.
Krueger, yeah.
I think it's Krueger. Yeah.
That guy, and he is anti ETH. He puts stuff out like if you have ETH in your name, that's it. Automatic classification as an idiot. Well, I own my name .eth, and I don't think I'm an idiot. And Fred and I are actually very similar backgrounds. It's hard for me to understand why an educated person on any level, and Fred's clearly very educated, would be so single-sided on things. Let me pull up another one here. Here we go. He says, I'm all for helping Mother Nature put a bullet in ETH's head. This is a Stanford PhD with a Cornell math background, and I guess I have higher expectations for PhDs. Now, having said that, if you dig a little bit deeper into what Fred's talking about here, he sees the truth, but I think he's unwilling to admit it. Let me see here. ETH is a monstrosity. It's overly complicated. But let's go all the way down to the bottom where it says Bitcoin does one thing. And I think that he's right about it. It does one thing very well. And in fact, later on, he talks even more about that, where he gets a question on what's the best thing to do with Bitcoin. And he said it's the best saving vehicle against inflation. If you own Bitcoin, you have basically some fixed amount of the total supply ever. So, Fred, I'm picking on you. I'm sure you're a great guy. But I just don't understand why people have such hard opinions that they can't see both sides of the equation on things like ETH and Bitcoin, or Solana and ETH, or this chain or that chain, or whatever. Because basically, there's this group of people that I sort of would defer my opinions to that seem like they're on both sides of this and see the value in crypto. you've got people here like Icon and Druckenmiller, and in particular, the one that caught my eye was Ray Dalio. Ray Dalio was sort of Larry Fink before there was Larry Fink, if my memory serves me right, and he's a deep thinker, and he owns both. He owns both and says they have a place in the portfolio. Larry Fink basically has the biggest Bitcoin ETF, but also is all into tokenization. And these assets like Bitcoin and ETH have their roles, and we need to be able to accept them both and use them both. People don't expect the US dollar to be gold or vice versa. We shouldn't expect Bitcoin to be ETH or ETH to be Bitcoin. It's a rising tide raises all boats. So that's one thing I've seen this week that kind of, I don't understand from educated people that they take such hard opinions and aren't open to other possibilities. So Fred, you're a great guy. We look to be of the same generation. If they want to have an elderly boxing match, I'm all up for it, but you got to give me a couple months to train.
I like that. I think that was a good critique there. I don't know much about him, but from what you showed, it seems like he's taken a real hardline stance, really classic Bitcoin maxi takes there. I frankly don't understand it either, because if you're just like looking at a market, you're looking at assets, they have different characteristics, they have different uses. You could even say, if you don't believe in anything in ETH besides, you just look at its on-chain metrics, and you could say it's all gambling activity. Okay, like Americans gamble a lot. There's a lot of companies that make money from gambling, which I don't believe ETH is just for gambling. I believe there's utility in these things. But even just saying that, that's a use case right there. You could say it's the greatest casino on earth. Yes. I mean, maybe that's Solana, but regardless, that's still utility. I don't dislike Solana. Solana's fine. It's just whatever. After the meme coin craze in the latter half of this first run up, whenever we were getting a lot of them honestly quite abhorrent, terrible jokes that were made on these meme coins, it kind of just showed the culture of the chain, which actually is important in my opinion, because people are talking about the Solar ETF, and it's like, why are they going to do that when there's all this baggage about all these different things that were associated with it that frankly aren't acceptable or okay? So it's just like, that's the culture. It's gambling, it's degen, and that's fine, but you don't want to put it in the same class as Ethereum, right, in my opinion. I think that's completely fine to say. Again, just like it's fine to say that Bitcoin and ETH are different too. So
Absolutely.
Yeah.
While we're talking a little bit about Bitcoin here, there's another tweet I wanted to talk about that got me thinking a little bit more deeply. And I'm going to pull this one up real quick. And basically they're talking about the Bitcoin hash rate, things like that. And what caught my eye was the top part, which says Bitcoin difficulty increase expected, because I guess something changed with the algorithm a couple days ago. But Texas heat could impact hash rate. And if you dive into this, it's because of power usage. And there's all these Bitcoin miners in Texas that are using power, and I guess it's variable power rates in Texas, so the cost of energy goes way up. But that got me thinking, this is sort of the beginnings of where real innovation happens, right? Maybe these Bitcoin guys, because there's real money to be made, drive forward other new forms of energy, bring them even more cost effective. In places like Texas, maybe solar costs get driven even further down, or maybe that spurs innovation in the renewable sector just to supply Bitcoin miners with the energy they need. Now, obviously, the other side of this is there are countries not as developed as the U.S. that are banning Bitcoin miners. If this innovation doesn't happen and we're relying on fossil fuels, then that is clearly not a great thing, that these miners are using so much energy. But it's just something to think about, where this chain of events could lead us to, something we never thought of. No one ever connected Bitcoin or crypto and new ways to generate and harness energy, which I think is a neat thing to think about.
Yeah, 100%. I think that's it's an argument that a lot of Bitcoin maxis, Bitcoin people make generally, is that it's actually really intimately tied to the cost of physical energy, because obviously you need it to mine the Bitcoin itself, which is interesting. So it will influence and evolve with our energy sources as a civilization as well, right, which I think is pretty interesting. So that kind of dynamic symbiosis just kind of speaks to the interesting nature of crypto as like a decentralized system that is going to impact all these different systems that we have, whether it be from the financial system, as maybe we tokenize assets, or at least they get involved in the traditional markets and energy markets, and kind of how we communicate, how we send payments over borders, how we govern different types of organizations. And we've tried this different kind of form of governance out with DAOs, things like this. So I think that really speaks to that as well.
Yeah, interesting stuff.
It's good stuff. Yeah. Well, that all sounds good. I think this was a good discussion today, very regulatory heavy, but I think we covered a lot there.
All right, guys, audience, we'll see you next week.
See you guys.